So how's the market? Well, let's take a look at our quarter one 2022 market update. In this update, we're going to include property sold valued between $1 and $100 million, namely in the retail, office, and industrial markets throughout Rockingham, Essex, and Middlesex counties. So the 2021, I can't even tell you. I mean, look at the volume this year, 839 sales. This market in 21 was hyperactive. I mean, that's just all I can say is a hyperactive market. Almost double the long-term average going back to 2006. And if we take the 2022 numbers, looking at year to date, this is March 10th. From Jan 1 to March 10, we're annualizing out closer to what the long-term average looks like. So effective change, 2021, you see the spike here in activity. You're going to see this downward trend, and that's basing off of the annualization of the 2022 sales volume. Right now, we're forecasting what the year might do. It's a little early to do that, but if this holds true, we're going to have a slower year this year in the market. 2021 will have been the busiest year to date. So that's just what the data is telling us today. And then looking back at the 10-year Treasury to sort of get an idea of where the market's trending, you can see here that we've been in a downward trend on the 10-year going back to 1985 all the way up to 2022. Currently, we're averaging about 1.86%. So when we stack up our cap rate market by asset class over the 10-year Treasury, right now we're seeing industrial products trading as low as 3.5% to 4%. And so that spread over the 10-year Treasury is running about 216 basis points right now. For retail property, we're seeing a larger spread, but still pretty aggressive at about 470 basis points, and then office at 516 basis points in our market. So what these spreads allow you to do is essentially gauge the amount of risk tolerance that investors have per asset class. And the bet here is that industrial is going to continue to grow and appreciate in value. And this is typical when you have a really hot property type. A lot of investors come in, want to buy it, drives pricing up, drives cap rates down, and you start to see those cap rates get closer and closer to the 10-year Treasury. Once they get really close, under that 200 basis point spread, you're starting to get into a real high risk zone in that product type. So long-term average from 06 to 21, just to give you a comparison, coming into 22, what we're on the heels of. Last year, 2021 saw 839 transactions between $1 and $100 million in that Tri-County market. That's almost double what the long-term average is. And the dollar volume, $6.7 billion in volume, again, almost 3 times the long-term average in dollar volume. So definitely, 21 was definitely the hyperactive market year. And then pricing, price per square foot, retail really still driving a lot of growth and value. We're still seeing multi-tenant retail demand from investors. They prefer retail that is drive-through. They prefer multi-tenant retail that is e-commerce resistant, so local services. Namely, you can't get your hair cut by Amazon. So that's kind of the idea there. With the industrial and office market still seeing rapid growth and value in the industrial market, seeing a huge jump just from 2021 to 22. We're seeing industrial values up 48%. So really taking off. Office is also holding its own. It's up 9.7% over last year, and the retail market up 22% over last year. So still some exciting things happening. Flex, however, don't be thrown off by this chart. Only 4 sales in the flex market since January 1st. So not enough properties to give us a real good sense of what the average price per square foot is. But I would say that it's going to be closer to that $200 square foot number, trending behind the industrial market. So let's take a closer look at retail trends. So retail sales, for number of buildings sold, 1 to 100 million. You can see 2021, monster year for retail property. Annualizing out, looks like 22 is going to also be a pretty solid year for retail. Volume, pricing wise, you can see here nearing $400 a square foot on average across the retail market. And then looking at the market cycle monitor that we like to refer to with Dr. Glenn Mueller, he's actually forecasting retail in the Boston MSA at a hypersupply stage that's kind of mid-stage hypersupply. That typically is characterized by more supply coming into the market. We haven't seen a big construction cycle in the retail market in this last market cycle. So this is going to be primarily driven by retailers vacating space and then landlords having to absorb increasing vacancies and softening rents. However, pricing in the market is still reflecting a lot of activity in this market for investors. So, keep an eye on that market. If it does continue to trend this way, you could see some cooling in the investment market for retail. Industrial property. Look at this chart. I mean, this is amazing. So, looking at the growth here, we're up 48% over last year on the average price per square foot. It's just absolutely insane. And we're seeing a supply-starved market where it's almost a crisis for tenants and for investors to find these properties to buy. Massive volume in 2021. Going to continue to probably see this continue this year. As long as the properties are hitting the market, we're going to continue to see a lot of activity. Industrial, holding the peak position in the market cycle. This is the optimum position for rent growth and appreciation. So how long will this hold here? I don't know. At some point, probably when a tenant says, no more, I can't afford to pay the rent, investors start to catch wind of that. You'll start to see a pullback in the market, and the pricing will start to level off. But either that or until we see more new construction come into the market. In our area here, these three counties, there isn't enough land. So we're continuing to see either purchases of obsolete office parks that are being redeveloped into industrial parks, or we're seeing existing industrial repurposed. We're seeing roofs raised on them to create more clear height. Still seeing adapt and reuse in our market here. So going to continue to see growth and appreciation. The office market, surprisingly, it's kind of had a bad reputation here as a softening class, and we are seeing in the market cycle signs of transition here, but pricing still strong, and so investor appetite is still holding up this office market, and volume was pretty good in 2021 comparatively. I mean, it looked a little bit more like an 06 year by volume standards, but looking out over 2022, there were a number of office deals that closed for this first quarter, and for annualizing those out, we should expect to see pretty good activity in the office market this year for trades. So here's our chart showing the transition of the office market. We're seeing tenants resizing their spaces. They're recalibrating how much office they actually need as they come back to the office and sign new leases. My estimation, and this is just my sense, is that we're probably going to see overall in urban office in Boston about a 35% adjustment in space usage by tenants. So they're going to reduce their allocation of square footage by about 35%. That's my sense of where we're going. The suburbs, much less so. I think the office market in the suburbs didn't see the big run up in the last market cycle in value and rent, and that's actually insulated it from some of this downward pressure or softening in the office market valuation. So happy to talk more if you're interested in discussing the market and what's happening with your individual properties. You're welcome to reach out to us. Our process is a 4-step process. We like to do a discovery conversation, find out more about what you're looking to do, what questions you might have. If you are thinking of entering the market this year with your property, we would create a thorough plan on how we sell your property and then share that with you. And if you decided to engage us, we would go through the execution stage and then take your property through the sale process, publicly or privately. And then ultimately, about 88.9% of our deals close on time and at the seller's accepted offer price. So happy to talk about that. You can call us at 617-674-2043 and ask for Jeremy. We'd be happy to chat with you about your opportunity in the market this year. Thanks.